Are you able to save money for your down payment in order to purchase the house? If you're having trouble, stay tuned, because in this video I'm going to share with you the ways how you could save money for your down payment and you'll be able to purchase the house. Hi, this is Rita JT, a real estate broker with Century 21 Innovative. As I mentioned, I'm going to share with you in this video how you can save money for your down payment, and the methods. By the end of this video, you will be able to utilize those ways and be able to save money for your new purchase. See, the most important thing the lenders want, because lenders are the one who are going to lend you the money. And as I mentioned in my previous videos, the first and most important is having a good credit history in order to get the mortgage from the banks, the loans from the banks, and to get a good interest rates. And the second most important thing is that you have a down payment. If you don't have savings, you don't have money, the banks are not going to lend you the money. So the banks are going, they also, other than the credit, they want to see how much income you have, how much down payment you have. So normally in cases it could be 5% to 20%, 25%. It just depends on what property you're purchasing and how much the banks need the down payment. Because a lot of time people say, oh, I don't have credit, I don't have income, I don't have savings. Can I still buy a property? No, because that's not the case. Because you have to have income, you have to have some savings to put down for the purchase of the house. So how you can save the money? So number one is make saving your priority, because a lot of times we keep thinking of buying a house, but we think, oh, I don't know, I don't have no money. So make that as a priority, that I have to save money because I want to purchase a house. So the second step is that you have to see how much is it my income and what are my expenses. So from my income, what are the things that I can avoid and put that money aside and start putting in my account and save that money towards the down payment. Step number 3, start tracking your expenses. Where am I spending my money? What are the things I can cut down? Because see, the stronger your desire to purchase a house, the stronger you will be in making sure that it happens. So start looking at your expenses. Okay, you know what? I can cut down on this. This is not a priority. I think I can live without this. So that way you will have some extra money to put towards your savings. So next is, like we call it like forcible savings. So what forcible savings are, that let me open an account that from my paycheck, $100 or $200, whatever you feel comfortable, or even if you have to stretch yourself, that it should go in my savings account or it should go in my RRSPs. So because you can use your RRSP money for your down payment as well if you're a first-time home buyer. So that is a compulsive forcible savings we call. So next is, if you think you don't have enough, because the banks want to see that they do not want you to spend more than 44% on your mortgage. So you have to have an income as well. And then from your income, if you're not able to save enough money, you have to make some sacrifices. You have to find another job. Maybe it's a part-time job, or maybe some other business on the side you're doing. So you have to have that desire and that sacrifice. So how you can make a little more money and start putting aside, because the banks definitely want to see that you have income at the same time. So the next thing is that the money you're saving, you can start putting in any investment account, savings account, where you get little more high interest. So when we say more, so that interest also will accumulate in your savings. But be very, very careful where you're putting your money, because you have to purchase a house in a short span, maybe a year's time, maybe a year and a half, or maybe, who knows, maybe in 6 months or 8 months from today. So do not invest your money in such an account like mutual funds or stocks, where it's a high risk investment, because in high risk investments, it might give you 20% at one time, but another time it might go down 20%. So you don't want to get into that risk. So guys, I'm pretty sure that these things are definitely going to encourage you and help you save the money for your down payment. But remember, patience, discipline, and consistency is the key. Do not rush into anything. It's not a small decision, it's a big decision, but there is nothing impossible. So you can definitely save money, but have little patience. And I'm going to repeat, patience, discipline, and consistency will never stop you from purchasing any property. Thanks for listening to me. And if you like this video, please subscribe to my channel and hit the bell icon. My details are in the description box. Feel free to contact me anytime. Thanks. Bye.